G'day everybody. Today I want to talk about the ongoing financial crisis that has gripped stock markets around the world. Despite the impression of a small recovery this Tuesday, I do believe that the fundamental underlying characteristics that are driving this market into a state of disintegration are going to continue, and that may sound alarmist and extreme. However, I beg to differ. Facebook, Amazon, Apple, Netflix, and Google, the FANG stocks, all experienced a major sell-off in the aftermarket yesterday following the close of the most horrific day markets have seen since the financial crisis of 2008. That's because there failed to materialize any U.S. government-sponsored asset buying at the end of the market, which typically signals that the cavalry has arrived in the form of today's working group on capital markets. We saw plenty of window dressing in the wee hours in futures markets as financial system plumbers attempted to paint a rosy picture in time for the open in New York on Tuesday morning. There is zero reason to presume a bottom has been reached. If anything, the spectacular gyrations in bond and stock markets demonstrate rather succinctly just how vulnerable our financial system has become. To recap our position since the onset of the historical quantitative easing in 2009, the injection of further liquidity into a financial system that is already overflowing with liquidity and reducing interest rates to the point where they have become a storage fee for capital is tantamount to pouring gasoline on an already raging inferno. The signals flashing red in yesterday's market action indicate that the increased pressure of more debt, more fabricated capital, and non-existent interest rates have once again reasserted themselves over the collected delusions of central bankers and the financial mandarins propping up the near-uniform cadre of reckless and irresponsible governments concerned only for their own self-preservation. That successive governments have chosen this path instead of responsibly interpreting the market's myriad warning symbols demonstrates in no uncertain terms that the search for responsible government that characterized my grade 9 studies of the history of North America from the 17th century to the present has yet to be realized. When market participants dump assets because the U.S. government failed to step in and shore up asset prices as a spoiled child would demand sweets, it is obvious that supply and demand have become subordinate to headline blackmail as the key economic dashboard for government. Increasingly, investors who are not sufficiently high-ranking in the pyramid of access to government largesse must become self-reliant and learn to ignore the false data being broadcast in mainstream media as the principal tool of communication to the public by a government compromised from within on all levels. The coronavirus situation is a case in point. The Center for Disease Control had issued guidance to healthcare professionals stipulating that the patients were not to be tested until exhibiting acute symptoms, a remarkable failure in the very institution at the pinnacle of disease prevention in America. Nonetheless, representative of the quality of information being driven into the public realm from top to bottom through media. A far more trustworthy approach in assessing the likely penetration of a coronavirus into the global population can best be conducted by a rudimentary analysis of the disease and its known characteristics using basic mathematics. If the incubation period can be as long as 14 days before infected individuals show symptoms, or those individuals can travel freely until diagnosed, merely infecting all they encounter until some form of isolation is prescribed, illustrates how we should be operating on the assumption that the virus will permeate every corner of every city in every country, independent of travel restrictions and quarantine. Furthermore, the existence of two strains of the virus this early in the evolution indicates a rate of mutation that will circumvent any ability to vaccinate or eradicate pharmaceutically known strains of the virus before they are able to mutate successfully. At the end of the day, the disinformation being broadcast by government sources through media pertaining to the coronavirus, in conjunction with the evidently false integrity of the global financial system and its ridiculous debt foundation, also broadcast by government through media, renders both of those institutions untrustworthy, in my opinion, to say the least. It is our long-held expectation that the imminent collapse of the US dollar and the global financial system is a prerequisite for a much-needed recalibration of the global monetary and financial systems and is once again, as in 2008, underway. Back then, however, the Fed and the US government did have the novel option of mass stimulus in the form of capital fabrication and debt proliferation, along with zero interest rate policy to unleash on the besieged financial system. These tools are no longer available. At least, not unless a fresh level of insanity is to be descended to by the powers that be. It is conceivable that we could start seeing stimulus measured in trillions of dollars as opposed to billions. It is also conceivable that new financial instruments with government-assigned values could be launched alongside campaigns of coercion against the global ruling class to legitimize them with acceptance and vocal support. One thing is certain, the emperor is now known by all to have no clothes, and more are willing to publicly proclaim that to be the case as the beneficiaries of the legacy debt fraud become fewer and fewer as interest rates evaporate. Absent regime change across the entire G7, this situation will only persist until its only possible outcome, which is a return to tribal warfare amid Darwinist survival rules. If that doesn't worry you, then your optimism is worthy of Candide. Well, happy Tuesday, everybody, and welcome to the second day of the financial crisis of 2020. You might look at the markets and think that there's no financial crisis. The spring is back in the step. The markets are bouncing. This was just a momentary glitch in time. But as my dear friend and co-host, Dr. Edward Milewski, will be sure to enlighten you that this is unprecedented. The movements and gyrations. It was a terrible storm. The boat rocked and rocked, and you ain't seen nothing yet. This market's gonna fall to pieces in the palms of the hands of the financial mandarins. You mark my words, young fella. That's what's happening, Edward. What do you say?
Yesterday was a historic day.
Historic!
By at least 3 measurements.
3 orders of magnitude.
The Dow has never dropped more.
Never!
Over 2,000 points.
In a single day.
The price of oil basically collapsed. And it started last week, but there was some additional information that came out from the Saudis. They're going to up their production from 12 million barrels a day to 12.3. Big deal.
Well,
but they're going to bump it up 3. They're going to say, hey, but I think that's their capacity. They, for all their cutting.
What? That's the capacity?
I think that's as far as
maximum.
I'm not sure. I don't live in Saudi
Arabia.
So
in that neither one of us are really big on the oil business. I mean, we don't really know if what was being asked of the other OPEC members in the context of Saudi Arabia's dominant position in OPEC as the de facto leader of the cartel, which it is a cartel. I mean, maybe Russia's on the right track. Like maybe there's more than meets the eye to Russia's refusal to play ball.
You know what?
Because
none of us are ever going to sit in those rooms, right?
I don't know. Well, you never know. You might say something nice about the right guy, like look at Sir Conrad Black. Says one nice thing about Donald Trump. Well, writes a book about him, but that is as brief as Sir Conrad Black is capable of being. No offense, Conrad, but he's a very verbose individual. That's my point.
He's got a command of the English language. Second, almost, a bit of a
windbag.
Wordsmith.
Wordsmith. Oh, I was going to say wordsmith.
I want to finish my point. So the oil collapse and interest rates dropped
through the floor.
Like we saw the 10-year rate go from $1.50 to 1.5%.
Jesus.
To 0.398 yesterday at one point.
Finally, the value of the U.S. dollar revealed in the interest rate.
I know. And now we've almost doubled that rate. So if you wanted to pick a day where and say, wow, I mean, it looks bad, but I'm just saying a little bit of a snapback today.
Sure.
A little bit of a snapback.
Sure.
After great moves to the downside yesterday in 3 areas: interest rates, oil, and equities.
Now, Were you not just a little bit disappointed in how gold performed yesterday?
Well, and so if this was really the shit hitting the fan, maybe gold would. I think we're getting close for the big move in gold, but we're not there yet. That's just because it didn't act right.
Right.
It didn't act right, and the guy on CNBC, who's a long-time trader, got a lot more money than I do. He said, we're going to wake up one day, we're going to see gold up a couple $100, and it's going to keep going up a couple $100 because the thing will, the money machine is going to be broken.
It's going to seize up.
I don't know if they've got enough oil to keep that thing lubricated.
Well, this is the thing, it's like, when you have to pay somebody to hold on to your money for you because nobody will pay you to borrow it, the value of money is thus revealed. If the value of money is nothing, then the value of money
is nothing.
I
buy that.
And that is the profound reality that we're dealing with here. This is one of the underlying indicators that no amount of quantitative easing can disprove. In fact, quantitative easing ad infinitum since the financial crisis of 2009 is the point that we're trying to make here. That has only been the addition of fuel to the fire that is now burning out of control in all markets, despite today's intervention by government-sponsored asset buying elements, which is, again, falls into the category of conspiracy theory if you're one of those butt-sucking, know-nothing, Bloomberg talking heads who really doesn't have a clue, yet has a six-figure paying job or better, seven-figure, eight-figure, managing other people's money. And so you think that the world that you operate in is the real world. We know, because it's not the world we operate in, and it's not a world to which we are ever invited, that it is full of bullshit. Yeah, anyway, so that might be hard for a lot of you to take, especially those of you who are professionals operating in the capital market system. However, the lesson of what we say will be your truth in due course as you seek employment and would be happy to shovel a driveway or even the odd sty of pig shit if you could get fed that way. In about, I'm going to say 5 years' time, this thing finishes unraveling and a reordering of the global sort of standard of living is going to make today's discrepancy in standards of living look like a holy shit, if only we could go back to that. Remember, back then we had credit cards maxed out. We were going out for dinner every night. New car on the driveway every 4 years.
A chicken in every pot.
A chicken in every pot.
Let them eat cake.
Let them eat cake.
Yeah, you know what? It's amazing, you can tell there's a bit of a slowdown in the world. Check the hotel rates sometime in downtown Toronto.
Yes.
You'd be surprised at how low they are.
Well, in the absence of any conference activity in the city as a result of the coronavirus, I think the PDAC was the last conference that the cities
That's usually a big one, but they were down, they admitted they were down 20%.
Right, well.
And that was probably...
It's not a bad thing for the conference to suffer a little hit in attendance. One is going to question down the road here as cases of the coronavirus build in the public ledger, what proportion of those could be ascribed to things like conferences and major vectors. People like to point out that, what are you worried about a conference for when we have public transportation and sporting events and all these things? Good point, but all those things are now falling victim to cancellation as governments desperately try to impose curbs on freedoms and what we come to expect to be our daily way of life.
Well, the big tennis tournament in California was canceled. Indian Wells. It's considered like the fifth biggest tournament.
Yeah,
I watched the basketball game in the
Chinese Grand Prix. They've banned all audience members from watching in person. Only drivers and their support teams are allowed anywhere near it. So this is the interesting thing to me, in the absence of a live audience, what's that going to be like? How much is the live? If you say, you know what, we're not going to perform at if Justin Bieber said, I'm not going to perform at Rogers Arena, I'm only going to, webcast it because of the coronavirus. Well, I think the attendance of his webcast would be substantially lower than the attendance of his in-person concert because the presence of the artist is such a part of the live experience. Maybe less so in things like auto sports racing and professional hockey and things like that. But still,
You ever been to a stock car race?
I don't believe I ever have.
I went to one in, I believe, North Carolina, and we had a nice indoor viewing area. But when you went out, the noise was so, I don't know, what would be the word? Strident? There's a word.
Cacophonous.
Roar. You felt like your drums were going to pop.
Your drums.
What?
Your drum kit?
I can't hear you.
Huh?
No, it's loud. It's
Yeah.
loud. Anyway,
What?
yeah, a lot of this stuff's about the experience. I don't know.
Yeah.
I don't know.
Okay, so anyways, this is our main theme for the week. It's not cannabis, so we are going to look at cannabis stocks today a little bit. But we are switching into a mode where, we're essentially going to cover the financial crisis that has now begun. Yesterday was the shot fired across the bow, though others would argue it happened 2 weeks ago now when the Dow had its largest single-day drop, before yesterday's largest single-day drop in the history of the Dow. But anyways, we are of the firm conviction that you think stock prices are low now in whatever your favorite sector is. You just wait. Today on the show, in view of that, we have Terry Harbert is here. He's the CEO and president of Talisker Resources, which is a gold mining, or rather a gold exploration junior. And then Nick Brody is going to be here. He's the CEO and director of Galane Gold, which is currently the financial sponsor of this show for the foreseeable future. We just want to make that clear. And so Nick is going to talk about what's happening at Galane Gold's two mines. One's in Botswana, one's in South Africa. And yes, you can expect us to be rather boisterously covering Galane Gold in particular because they are paying the freight for this here little shindig. In the observation of the BCSC's directive to discuss the negative risk factors as well as the positive attributes of any company that for whom we might be deemed to be providing a promotional activity, which this definitely falls into that category. We are going to discuss, and I think we have Nick discuss in this piece some of the risk factors, and always something to keep in mind. Keep the risk factors in mind. Just want to point out the language going across the bottom of our screen right now. Disclosure is the better part of valor in our business, and so bear in mind that almost all of the companies that we talk to, we have an interest in some way, shape, or form, either currently or in the past, or may do in the future. At any rate, you should consider everything that we do in the context of an advertisement, and that's just being fair. Just being fair. So,
Without further ado,
actually, let's chat for 2 more minutes, shall we?
Let's chat.
Because
Okay.
Donald, in the control room, Donald, can we cut to you for just a moment?
and
Donald was laid out with, that's the coronavirus isolation room in there, and Donald, fortunately, has got company in there isolating with him in coronavirus land. There's Alexi, yeah!
He's isolated the virus.
He's isolating the virus in there, that's right. So we've desanitized, or what is it? Disinfected. We've disinfected everything in sight repeatedly because why not? Yeah, look at that. So let's take a look.
Let's take a look.
Okay.
Let's see what the S&P's doing.
Okay. First, we're going to start with a look at the S&P 500 and have a quick discussion about what is going on there.
Wow! Look at this.
What do you got, Ed?
It's it looks like we're at 28.55. The low was 27. We're near the highs of the day here. It looks like.
Okay, so
from a very yesterday. I mean, this is where it got to.
Yeah. Okay. So we're still nowhere near where the market.
Well, it doesn't even look like it doesn't even register.
Right.
Get my pen out.
You got your pen there. You got a pennant. So from a technical basis, Ed, you were mentioning earlier that you felt that if the market closed higher than it opened, that it was going to continue to rise, and if it closed lower than it closed yesterday, that it was going to continue to fall. And what is your assessment at this point?
That right now, it looks as though we are about to take out yesterday's highs. Now, I'm not that familiar with this chart here.
Oh, that's the S&P 500.
Oh yeah, no. So we open. Okay, we're right where basically the highs of the day. We're at the highs of the day.
Oh.
Which we hit this morning, first thing.
Oh.
Okay, and that's right there and right there. Those two, you see that? And there, I put some glasses on this guy. There you go.
Yeah, look
Easy
at
to
that.
see. Easy to see.
Where's your stick man?
Where's my stick man?
Okay, so now I'm going to pull up a quick chart here of CGC, canopy growth in the United States. Whoa, it's going to the big look, and I don't want the multi-look. I want the single look. Here we go. So look at this. So canopy has had a nice bounce today. Up from, where are we at here? Woo. Oh, I'm intraday here. Okay, so up from, oh, actually, no, sorry. Yeah, it's got a little bounce. It's up $14, up to $14. It's, sorry, bleh. It opened at $14.06. It's currently at $14.13. So kind of a sideways day. So this is how you can tell when I make reference to government-sponsored asset buying directly in the market. I'm referring to, and you can access Wikipedia to look this up, the President's Working Group on Financial Markets. And this is a funded, congressionally sanctioned, I believe, group that's tasked with the stabilization of stock market indexes through the direct purchase of assets in these markets, usually in the form of S&P 500 futures, ETFs, etc. And you're asking yourself, well, why would any government entity step in and start buying stock? And it's because when investors who are the large earnest investors in the marketplace see the government stepping in to shore up the market, it is a de facto floor on where the government is transmitting to the marketplace that they are willing to let the market dive to, because the government is terrified of negative headline risk, where the media sources are obliged to report that the market is crashing. It's the worst day since 2008. And we've already had a few of those days this year. And our position is we're going to have a lot more, barring some miraculous device of the Fed that either takes quantitative easing to an exponentially greater level than we've seen, i.e. measured in trillions as opposed to billions, or some other crazy, as yet unrevealed, government fabricated Frankensteinian asset that...
Frankensteinian or Frankenstonian?
Frankenstonian. Frankenstein.
Frank and Oak.
Frankenstein is the German version.
Right.
Frankenstone is the Irish version.
The cave version.
The cave version. No, that'd be Frankenrock.
Frankenrock. Okay.
So what do you think? What do you say? Put that in your pipe and smoke it, Milewski. What do you got to say about that, eh?
Yeah,
Polski or Gorky? Come
Polski,
on. Let's see your let's have a quick Polish comeback on that.
Hello.
Whoa, that was a quick Polish comeback. Though its meaning is lost on the assembled audience.
Nobody even know what that meant except my dad.
No, exactly. Okay, so Canopy Growth Corporation. We'll look at Cannabis Wheaton in a second just for our mutual titillation. Actually, I was walking down the street last night and I walked past Chuck Raffici walking down the street. And Chuck was, cordial. Hey, James. I said, hey, Chuck. We carried on our merry way.
And who wants to talk to no anecdotal stories?
No backslapping.
No, remember when we had money or anything like that?
No. It's like when the market is shit, nobody wants to see you.
I know. It's true.
Yeah. Well, let's count. How can we count on one hand the CEOs who we have basically ushered into obscurity through a former sort of.
For instance, if you wanted to bring back some CEOs that used to be CEOs of marijuana companies, they're no longer CEOs of marijuana companies.
And do you think they'd even answer the phone? I'd love to invite Vic Neufeld back, though he actually said point blank to me the last time I saw him in a coffee shop over here on Yonge Street. He said, please don't call me anymore.
But he said please.
Please. Well, I'm not sure that he ever did say please. I'm probably embellishing there on his behalf because, whatever. Anyways, so yeah, we've got our own problems, and nobody in the cannabis space is jumping for joy, except maybe the guys at MetaPharm and Valens Grow. What is it with these extractors?
Well, because I think they produce the product that's needed by everybody else. I think if they can do it...
Well, I think maybe they focus on processing and not growing is one thing.
So you don't need me to answer that question you just asked.
Well, no, I'm adding to your answer. I'm augmenting your excellent response.
Well,
because that's the bottom line, is these guys are providing the service to the growers,
right?
Who, because they're so focused on trying to turn a profit growing, that they have not really been able to master the expertise inherent in extraction and secondary product production.
Right.
Therefore, they rely on entities like Valens Grow and MetaPharm to take their product and turn it into something they can sell, arguably. See,
Yeah.
I haven't been drinking for like 5 days, although I did have 3 Negronis last night. I forgot.
Well, you don't consider 3 Negronis, which is like 9 ounces of booze per glass.
You know,
so you only had like a fifth of booze. I haven't been drinking.
That has no effect on me these days. You know, it's the consistent daily dosage of 50 milligrams of CBD.
Maybe I should try it.
You should.
Because I can't drink anymore.
Well,
I can drink, but I can't stand the day after.
Well, I don't have hangovers anymore.
Whoa.
Like, this is me after like 3 large Negronis.
Do you ever get hungover?
No, not really. Actually,
over?
last week was PDAC. I went to 1, 2, 3, 4 dinners in a row over Monday to Thursday, and I did suffer a hangover a bit on Friday. But a bit. Well, not like a non-functional one. I mean, you can see on the show. I did the show. The show was okay. It was a not bad event. Anyways, we digress.
Yeah, I digress too.
You digress?
Well,
what about Congress? Okay, enough of the stupid jokes. Okay, let's talk a bit about gold here some more. So right now, I've pulled up the chart here. I'm looking at the S&P versus the price of gold from 1998 here. And let's just say that the S&P here is, you know, more or less moved sideways from 1998 to 2011. It was not the index that delivered double-digit year-on-year growth as it has been doing since, call it 2017. Like, no, let's see, double-digit year-on-year growth. Yeah, probably since 2011. At the same time, gold, as soon as the S&P was empowered through the proliferation of capital that was printed by the government, as soon as that became, you know, the main reserve asset of choice, the main tradable asset of choice by major sovereign wealth groups, as well as major precious metals and commodity traders, as soon as that swapped, then gold became out of favor. And if you look at 2014 to 2019, it basically traded sideways in a range between, call it, let's see, it got down to just over $1,000 an ounce in November of 2015, and then has since been on a tear and is now flirted with $1,700, now backing off to $1,650. Though,
well, you know what? And when your markets are rallying and interest rates are even though they've been hammered, rates have risen dramatically today from their historic lows of yesterday.
Right.
And so
they're up 50%.
Gold backs off a bit.
Yeah.
So this is but it's all about jockeying for position.
It's the push me pull you.
It's push me pull you. Push me pull you.
The push me pull you. The Dr. Doolittle of the market.
There you go.
Yeah.
Yeah.
Anyways, that's as profound as we get here. We're going to check in now with Nick Brody, CEO of Galane Gold, who is our sponsor. Nick Brody joins me now. He's the CEO of Galane Gold. Nick, welcome back.
Thank you, James.
Nick, you guys are making great progress on your company's endeavors in South Africa, Botswana, and you were expanding the production.
Yeah, so we talk about it being in two phases. So we had the Mopani asset, which is already running.
Yeah.
Acquired that back in 2011. Last year we did 30,000 ounces. This year we're targeting around 36,000 ounces.
Okay.
Which is an all-in around 1,050.
Okay.
And we think of that as a mature mine, and it's never really going to increase its production. It'll be somewhere between 30 to 35 going forward.
Sure.
Yeah. But the Galaxy asset is great because it's got the opportunity to scale it up. Yeah. And it's got 21 ore bodies there, and we're only going to mine at 2 of them.
Really?
Yeah. And the first phase was to go up to 26,000 ounces, and that's the phase we're running through at the moment. So last year 2,000, this year 11,000, next year 26. And we only just announced that we're putting together a new preliminary economic assessment with Minexcom, an independent third party, to support that ramp up to 60,000.
Sure.
And part of the money we raised has already gone in to doing the plant. So we have the plant that's capable of doing 60,000.
Right.
All we need to do is the development in those 21 ore bodies to fill that plant now.
Wow, so you could be at 100,000 ounces. It's conceivable.
It's conceivable, it's a stretch, but definitely 90,000 ounces,
Okay,
yes.
so 90,000 ounces, and my understanding is that you are paying down the relatively small amount of debt you've got.
Yeah, look, last year we took around 4 million out of that. It's broken into 3 parts. There's some with the Botswana government, deferred royalties, and we have a repayment schedule with those guys, and they helped us when we went underground at Mopani, and it was really very much appreciated.
Sure.
Then we have another amount which we took out to restart Galaxy.
Okay.
We made the first repayment this month, and we'll continue to pay for the next 24 months. And finally, we have some debt that we took on when we acquired Galaxy. That was originally 6, but that's down to 3 now. So we're making good steps of getting rid of all of that debt.
Sure.
It's got a little bit easier for us, yeah. We budgeted at 1,400 this year, and gold's over 1,600.
Sure, so that must be one of the major factors that's making your sort of progress financially really sort of zing along better than expected.
When I sit there at night, I think, okay, I'm making 46,000 ounces this year.
Yeah.
Gold price is $200 higher than I budgeted. That's an extra $9 million worth of free cash flow for me.
Wow.
You can imagine what difference that makes to my debt and all those other issues with regards to expansion
Yeah.
and self-funding.
Sure. So what is the longer term strategy for Galane Gold? You're producing gold mine, you're a profitable gold company now, and you've got the world at your feet. Your equity is available as currency to make acquisitions. You can probably raise capital in this gold environment.
Yeah, look, the reality is we built a strong management team, and that's what we first wanted to do. When we put Mopani into production, well, it was in production, but changed it to an underground mine, we recruited a strong team with metallurgical skills, underground skills, and that team has put that asset into production and kept it going. We've now moved it to Galaxy, and they're doing exactly the same there, and we're going to execute on a deal there. And the idea is to find a pipeline of projects. So we're continuing to look for assets that are similar, and this market's going to be different. We believe it's going to, the assets, the larger assets, big open pits don't exist anymore. It's going to be underground. It's perhaps going to be difficult metallurgical assets, and that's our skill set.
Right.
And at the moment they're still undervalued. If we can acquire those and put them into production, we have, as you said, the sky's the limit with our potential.
So you're not after the massive deposits that all of the big companies like Barrick and Anglo and Newmont want. You're going for the inventory of gold projects that people...
Look, the reality is we're probably looking for 50,000 plus ounce per annum. Yeah. But we put a few of those together.
Right.
Then we're talking about a really good mid-size company.
Sure. Well, that's great. What is, in your opinion, what is the investor appetite for gold at this time, and do you see it improving over time as the price continues to ratchet higher?
Look, I can only go from the meetings that I have and the people I see. So I was in Indaba, which is in South Africa, which is the African mining side of things. We went to a one-to-one event, 2 days fully booked out. Yeah, everybody wanted to talk to us. Everyone's interested in gold. Come to PDAC. Last year was pretty quiet. Not many people wanted to talk to me.
Right.
This year I'm fully booked for 3 days.
Wow.
Yeah, everyone's calling me. I'm not having to call people.
Right.
The world has changed, so it's just a lovely place to be.
Yeah, you bet. Okay, so what are the real near-term milestones that investors can look out for that will be indicative of increasing value?
So we got our full year results out in April, which will be, as I said already, 32,000 ounces, but it will be a positive cash flow. Then we've got the commissioning of the mill, the 50,000 ton mill at Galaxy, which will be in May. We'll also have the new PEA coming out from Minexcom, which will be towards the end of May as well, which will support our plan to get up to 60,000. And this year, it's really just about ramping up production at Galaxy.
You bet.
Yeah.
Okay, so securities regulators in Canada are asking us to focus on the risk factors as much as we focus on the positives about companies in these environments going forward. So what are the biggest challenges for Galane Gold going forward?
Well, look, let's separate the two assets. So the Botswana asset, Botswana is the #1 mining place to go in Africa. It's a very safe jurisdiction. My favorite fact is it's less corrupt than the UK.
Right.
That's hard for a British man to say.
Right.
So, okay, but there you go. So, and it's a stable, historic mine. I think there's a lot of knowledge about that. If we go to the South African asset, well, we're starting up there. So there's always a risk in a startup.
Right.
Yeah. But we've got the team that's delivered at Mopani, and we're trying to mitigate those risks as well. Yeah, also politically, South Africa isn't perfect. I'm not going to pretend it is.
Right.
But we're in a good area. We're away from the Johannesburg. It's a very stable area, and we get a lot of support from the local community. So I don't see it as a risk, and it's something that we can manage. I've worked in the Congo, a much more difficult area.
Sure.
I've worked in Zimbabwe, again a very difficult area. To me, South Africa, it has its risks, but not compared to the rest of Africa.
Right. So the South African headline items have been recently discussing the sort of the condition of the power infrastructure in South Africa and how lack of investment over time has caused it to be more or less insufficient for the country's needs right now. Does that have an effect on your ability to mine?
Interesting enough, because we're not in the main urban areas.
Right.
We don't get power cuts like everybody else. Yeah.
Oh.
So we experience it. Our biggest issue with regards to power cuts is we're in quite a stormy area, and lightning strikes on the power line. That affects us more than actual blackouts.
Oh, okay. So that's just an operational hazard that you're used to dealing with.
Exactly.
Oh, fantastic. Okay, so then, what is the likelihood that Galane Gold becomes a takeout target by a larger mining company?
That's an interesting question. Look, I'm personally not here to build it to be a takeout.
Right.
I'm here to build a big corporation. That's what I've set out to do, and that's what I'm trying to do with Ravi, our chairman. What I can't do is stop somebody looking at us.
Right.
And I think we're very undervalued at the moment.
Sure.
And if I was looking at us, I think we'd be a good investment. There's potential there for a 90,000 ounce producer.
Right.
You've got a company next to us in South Africa called Pan African, which is a much larger market cap than us.
Okay.
And they need resources. Maybe they'll look at us. Yeah. We've got a joint venture with B2 Gold in Botswana with regards to exploration. If they find something there, maybe there's a discussion there. But yeah, we've got to look interesting, but what we've got to concentrate on is getting Galaxy into production, because if we do that, we reduce our operating costs and we'll look even more interesting to those larger majors.
Well, fantastic. All right, let's leave it there for now, Nick. That's a great update. We'll come back to you soon. Thanks for joining me again.
Thank you, James.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. This is the thing. Ed just said the stock is so cheap it's stupid. However, we can't say shit like that on camera. He said it off camera. But I just wanted to say, those are the kind of comments that we're hearing about Galane Gold when we bring people's attention to this. Like, the problem with your first perception of Galane Gold when you look at the chart is like, oh, this is a gold junior trading down at 10 cents. It's like, that's as far as you go. That's the opportunity, because first look, you're going to think, oh, this must be a gold junior is looking for gold, blah, blah, blah. No, this is a gold producer producing gold profitably from 2 mines. $6 million in free cash flow last quarter, $9 million.
I think he's saying $9 million for this year. $9 million.
Yeah.
That's like doing a $750,000 funding every month.
Yeah. Yeah.
With no dilution.
Yeah.
Now, at some point, if the stock doesn't move, they should take some of that money, assuming they get it out of the debt, and use it to buy back their stock and take away the excess float.
Oh, blasphemy, man. Buy back the stock. What do you think this is, Apple? Holy shit, buy back the stock.
This could be, you never know.
Why buy back the stock when we can just bring in new shareholders to buy back the stock or buy the stock for them?
Wow.
I mean, really. So that's the purpose of the sponsorship.
We're just
for us to tell you about the opportunity inherent in Galane Gold. Not appropriate for everybody, but certainly an interesting opportunity if you are a risk-tolerant resource investor and you understand what's going on. I personally worked very hard to talk Ravi and Nick into pick us, because this is a deal that we think we can work with, that will not embarrass us, that will not hurt the brand Midas, that will in fact perhaps restore some of the lost luster of days gone by when I was more of a take all comers kind of guy. which I am definitely no longer. In fact, well,
I mean,
what do you mean, well?
but that's the you can't. If you say, look, I mean, this is business 101. Not everybody that's going to walk through the front door is going to shower you with benevolence.
Oh, that's a good point. Well, especially as the mining market collapsed from 2011 to 2015, 16, 17. I mean, if you picked, there were very few opportunities to enter, to pick a stock that would have done well. Now, there were exceptions, obviously, but you know, they were few and far between. That's this thing happening here.
This thing? What's this thing?
This is somehow my computer has just started making a lot of noise.
Really?
Yeah. And I'm trying to figure out why. Oh, there we go. It's because I touched the speaker button, which caused it to, and I've got multiple windows open. Anyway, so yeah. Nick, if you listen to, he's planning to go up to 60,000 ounces per year at one site and 32,000 at another site.
90,000.
90,000 ounces in total, 92,000. Potentially, possibly, best case scenario. I mean, the price of gold keeps rising. They can afford to do more exploration.
So say they're getting 2,000 Canadian. Mm-hmm. Quick calculation. So
they're selling their gold in probably South African rand.
Well, U.S. dollars.
USD.
Everything's sold. I think that's how you. It doesn't matter. But point I'm getting at, if you multiply, say, 100,000 ounces times $2,000, you start looking at that number.
Yeah,
that's a big number.
Yeah,
that's like $200 million of revenue.
Yeah,
is that right? Or is it 20 or 200? I don't know. It's big.
Well, let's just say it's more than any gold junior explorers are making.
And the thing is capped at roughly, it's less than $20 million.
Yeah,
it's a sin.
It's amazing. Quick acknowledgement of our audience on at the Midas Letter site here. M. Wilson, hello. Thank you for joining us. Dale Sanga says hello to us. We say hello back. Brock N. What's happening in the markets today? Well, boy, where were you for the last half hour? Lots of shenanigans. Ichigo, Ichi-E. BS. Amen. I think he's referring to us. Nice. She-Vet Ketostatic Bafanifi is with us. She is probably at this point, oh, there's Nika Domi too. Okay, those two ladies have definitely the leading patronage for our humble channel, and we really appreciate you guys. In fact, Nika's been on the show. She-Vet hasn't been on the show, but if she brings back some potatoes, she might be on the show. Yeah.
The purple ones.
The purple potatoes from Peru.
Purple potatoes from Peru.
Purple potatoes from Peru.
Perfect.
She-Vet Ketostatic Bafanifi is bringing purple potatoes from Peru.
Perfect.
Boy, you can tell we haven't been drinking. Oh wait, I had 3 Negronis last night. Jeez.
Still hammered.
I know. Still wasted. Yeah, anyways, so Nicholas Krause, who joins us, says, I hope you asked Nick how the daily power cuts in South Africa are affecting the business. At the Galaxy mine he's referring to, and I did in fact ask him how the power cuts were going to affect his business, and Nick indicated that they weren't really an issue for them at the mine given their current production profile, though he did acknowledge that, that electricity cuts are a risk anywhere in South Africa, potentially in the future. So certainly a risk factor that was acknowledged by the CEO, and certainly, Nicholas, a great question that you'd want to know as an investor. But is it impacting their anticipated production of gold in 2020? No, sir, it is not. So there. And even if your power cuts did negatively impact your production, it would not probably do so significantly unless the whole power grid collapsed, which is that a real legitimate risk factor? I don't think so. Methinks not. I think not. Anyways, what else? What else is going on, Edward? Well,
I'll tell you. There's lots going on.
Yeah, okay, so tell you what, why don't we take a look at our long-suffering cannabis indexes here on MidasLetter.com, and I would apologize in advance for the condition of cannabis stocks, but it's just not our fault. However, we have been enthusiastic promoters of the entire sector. Why? Because I'm a lifelong cannabis user, and look how crazy I've become thanks to cannabis. This is what you get. Crazy. Crazy, crazy for feeling so lonely.
Wow. That's pretty good. Patrick Klein.
Patsy.
No, Patrick.
Patsy? Patrick? Patrick Klein. That's the Irish in me.
Aye.
Top of the Martin to you. How about I beat the shit out of you, my shillelagh, and steal your pot of gold, you motherfucking leprechaun. Anyways, we were looking at the cannabis markets, and in the spirit of St. Paddy's Day next Tuesday, they are green. Look at that. In honor of St. Paddy's Day, the markets are turned green today. And it's not until next week when we drink our Irish whiskey.
Irish stew.
Our red breast. Irish stew with some
What
soda
do they
toast.
call Irish beers? They nicknamed it Irish stew?
No, they call it Guinness.
Oh, yeah. Are you with us?
Or
Guinness?
Kilkenny. Guinness and Kilkenny. I guess those are the two most commercial brands. Hey, Donald in the control room. What's new? Irish beers might we be able to look for in the pub, huh?
Jesus.
Just Guinness and Kilkenny. That's all he's got first. Nothing changes. What? If it's working, if it's not broke, why fix it? Anyways, yes, looking at the cannabis stocks here. Despite the green hue of today's market indicators, they are still down. And let's see if cannabis stocks are going to continue to emulate the broader market or are in some way reliant on the broader market's health and well-being for their very own ability to appreciate in price. Then you can look forward to a shit ton more misery. I'm sorry, that's all there I can say about that. But yeah, look at Canopy Growth added what, $2, up 7.2, $1.30 from yesterday's close, up 7.22%. Cureleaf Holdings up 4.86% to 604. These numbers are still down along. They can still be thought of in the context of the lowest prices ever, though it's good to see such robust recovery on a day where the S&P is itself experiencing a somewhat robust recovery. But again, and in full recognizance of the idea that this sounds like dyed-in-the-wool conspiracy theory, I do believe that this bounce is the result of government-sponsored direct asset buying in the markets. So chalk me down for a conspiracy theorist, but if the whole shit thing does fall apart the rest of the way, then you'll remember, theoretically, actually probably Nouriel Roubini will get the credit again. Remember, Nouriel Roubini was the economist credited with predicting the great collapse of 2008, and all of us fringe, like non-economists, like whack job newsletter guys were screaming this from the rafters in unison, essentially, or actually probably in disunison, and probably a little bit disharmonically. Nonetheless, I can think of a dozen newsletter guys who were predicting this collapse back in 2004, way before Nouriel Roubini was in the mix. Anyways, no offense, Nouriel. Love what you do. Love what you do. It's just, frustrating for us fringe publishers who tend to occupy ourselves with what's really going on in what you guys call the financial system. We call it the large fraudulent casino, where basically a certain subset of the players have a finger on the button of the roulette table and stop it wherever they want, whenever they want. Anyways, that I know, conspiracy theory. Anyways, so back to real numbers. Kronos Group added 4.6%. Not bad. Basically, everything's green today except Charlotte's Web is suffering another decrease in price. Let's pull up their page here and see if we can discern a press release to explain why Charlotte's Web. So their Q4 earnings conference call, let's see, was it was planned for March 24th. So,
Did they postpone it?
No.
Okay.
The call is on, the call is on March 24th. You'll be able to listen to a replay through till March 31st. So unless somebody knows something we don't, ahead of earnings when the market starts to sell off, probably suggests that bad news is coming. What else is down? Well, the Green Organic Dutchman continues its descent into purgatory, down another 1.16% to 46 cents. Boy,
43 cents.
43 cents. What did I say?
46.
That's so weird. I've got dyslexia like you wouldn't believe. I saw the 4 in the left column. I was looking at the 6 in the far end of the right column.
You didn't see the numbers in between?
No. Like that is some really...
Yeah, what did that stock get to? Is that like a $5 number?
Let's pull up a chart just to reminisce a little, shall we? Saturday night and I was reminiscing with my girl. Well, they pull up the chart, a little musical interlude. Okay, look at that. On Wednesday, September 19th, it had an intraday high of $10.24 on 24 million shares traded. So it's gone from $10.24 down to 42 cents. What's the percentage loss there, Edward?
From $10 to 43 cents?
Yeah, 95%?
About 95%. Woo! Probably about 96%.
96% loss. So, like I said, how the mighty have fallen. Now, is the Green Organic Dutchman going to be able to survive and pull a rabbit out of the hat?
It's not for us to say.
It's not for us to say.
But judging by what's going on here, I'd say a lot of these companies, I think, you know what, you're going to have to rebalance your indices next year because some of those companies won't be around.
Interestingly enough, here's a press release that says the Green Organic Dutchman will release its fourth quarter and year-end 2019 financial results on March 10th, 2020. Correct me if I'm wrong, but isn't that today, Edward? It is today!
Jesus.
Today we're going to find out what the... yeah, I'm a little bit excited today. Why? Because St. Paddy's Day is merely less than a week away.
Jesus.
Oh my gosh. It's the only day of the year where you can drink an entire bottle of Tullamore Dew without getting in shit from the missus or the mister, whatever your preferences might lean towards. Anyways, so yeah, getting ready for the big Leprechaun Day. Actually, Sean's parade. I forgot. I promised Sean I would plug the Toronto St. Paddy's Day Parade coming up this Saturday, right down Yonge Street, all the way to Queens Quay, all the way over to Bathurst, back up Bathurst, down Spadina.
And where does it end up? Probably in an Irish pub.
At an Irish pub. Okay.
The one in Ireland's canceled.
The Irish in Ireland's canceled.
Right.
The parade in Ireland's been canceled. Actually, we'll have to get Sean here on the show and find out.
Yeah, you know what?
He would be the one to know.
He would be the
All right, Sean, if you're listening, give us a call. Tell us, is the St. Paddy's Day Parade canceled perchance? No, what about the one here? We don't know. You don't know.
No, wait. You know what?
It's 5 days away. Anyways, yes. Now, we're going to hear from another quality gold company because we like to feature a bunch of different gold companies. Our policy this year is that we are not going to feature shitty gold companies that are run by promoters. We're only going to feature quality gold companies in both the production side and the exploration side, and that is a judgment call on our part, except in the case of Galane Gold, who's our sponsor, so therefore we can't be trusted to, opine objectively. We're biased, conflicted, and we're happy about that fact, aren't we, Edward? Because if there is a gold company whose options might be worth something one day, and we have some as a result of this, and it's likely going to be Galane Gold if ever there was one. Anyways, Terry Harbert is here. He's the CEO of Talisker Resources. Terry Harbert joins me now. He's the CEO of Talisker Resources. Terry, welcome.
Good morning. Thank you very much.
Terry, let's start with an overview. What's Talisker Resources all about?
So we have two main focus in Talisker Resources. The primary focus is our Spencer's Bridge exploration package.
Oh, I know where that is.
And
Nicola Valley?
That's exactly it.
Right.
Yes.
Love that area.
So it's an early stage exploration program, and that's what we founded the company on, more or less. Mm-hmm. We were working with our strategic partners there, West Haven Ventures, who you might know as discoverers and now drilling out the Shovel Nose project. We were able to stake around about 85% of that belt just prior to them making that discovery in one of the largest single land staking events in British Columbian history. So we're very proud of that. We've actually been working very hard in the first year. We're only a very new company, just about 10 months we've been listed for, but we're also very aggressive. So we had about 23 geologists in the field, a couple of 1,000 stream sediment samples, and defined numerous drill targets that we're going to attack and drill this year.
Okay.
But we've also got a secondary focus, and that's the Bralorne Historic Mine Camp.
Oh.
So it's a larger drill-out focus and probably the flagship of our company at present.
Wow, interesting. Okay, so what's the geological setting at Spencer's Bridge, and what's the host rock and all of that?
Well, in Spencer's Bridge, it's what's called a low sulfidation epithermal deposit. We believe that it's developed in a continental rift zone that formed in the Cretaceous, so it was a strike-slip, pull-apart basin.
Okay.
These basins initially fill with conglomerates that come off the surrounding higher materials, become lakes, and then open up wider, get felsic volcanics, and then finally finish in the sequence with mafic volcanics.
So tell me about the Bralorne deposit.
So Bralorne deposit was an old historic camp in British Columbia. Was mined originally from 1929 to 1971. There was a total of 4.2 million ounces produced at an average grade of 17.7 grams.
Wow,
so
high grade.
One of the highest grade, longest producing gold mines in British Columbia, and one of the highest grade, longest producing gold mines in Canada in general.
Sure.
So our belief there is that there's a lot of unmined potential still sitting along strike and below the existing deposit. So initially, when it closed, we were going through the gold standard. Gold price in 1971 when it closed was $35 US an ounce. So we put that in current dollar value. It's about 220 current dollars. Also at that time, the US and Canadian dollars were at parity. So that was actually about 220 Canadian an ounce. So we're an order of magnitude different now. We're well up into the 2000s. Right. So there's a lot of material that was actually left behind along strike of the existing veins that just wasn't economic at $200 gold price. The production that we see there, it's got incredible continuity as well as the high grade. Historically, in two of the mines, Bralorne and Pioneer, we're still compiling data for King, but for every 50 metres that they mined, on average they produced 115,000 ounces. So that's about 2,300 ounces per vertical metre.
Sure, that's incredible. So then obviously you're planning to drill that, and do you have what kind of budget set aside for 2020?
So for 2020, just at Bralorne, we budgeted to do 25,000 metres of drilling. The cost for that, also with some dewatering, we're looking at about $11 million direct into Bralorne.
Okay. What's your next sort of milestones that investors can look at and say, oh, okay, progress is happening?
Right, so we're very aggressive with our exploration planning and our implementation. Key for everyone to know that we only actually acquired this asset in December of last year. So we're only in the second months. We've already got our first drill rig on the ground. We've already drilled 4 holes. We should have drill results coming out before the end of this month, and we'll have a stream of drill results coming out for the rest of the year. We're also finishing our planning on our dewatering. We finished the permitting plan and the water treatment plan, and we're just finalising the engineering plan, so we'll be initiating that water treatment as well. So we're taking the project forward on a lot of fronts. One of the fantastic things about the project is simply the amount of infrastructure that's at the project. Right. Because we're in South Central BC and it's a historic camp, we're not doing facing the challenges that others of our peers have to face, like building roads across glaciers or 200-kilometre power lines.
No helicopters, no tundra.
Highway to the front gate.
There we go.
Power line connected to it. 2 hydro plants just next door. Right. Already got a camp and kitchen. 50 years of metallurgical data. Right. Very high recovery, 90% historic recovery. Okay. So all of these fantastic things that, with building a large scale and what we believe can be world-class resource, it really adds into a turnkey operation.
Sure. So I guess because Bralorne was historically a producer, there's no First Nations issues, there's no environmental permitting issues.
No, so all of that's been already understood very well and signed off by the government. We're developing very, very good relationships with our First Nations, looking at quickly signing engagement agreements and business development agreements with them. We have a quarterly environmental meeting with the Ministry of Mines and Environment and each of the First Nation groups that we chair, where we look at monitoring and we look at the water treatment. So it's a very good engagement. Talisker as a company, we're very committed to First Nation engagement. We're one of the few junior explorers in the world that has a public policy on Indigenous engagement. We implement integrated environmental techniques in our Spencer's Bridge area. We have a garbage collection system that when we're walking up the creeks anyway, we identify garbage and we collect that, our geologists, and we recycle some and donate that money. We have invasive species programs where we identify invasive species and we either map and monitor that, or we extract it if it can be contained.
So a very proactive, community-oriented program. That's great. That's exemplary. The BCSC wants us to look at the warts as well as the sweet spots in any company we talk about. So where are the challenges here?
Well, obviously we're looking at an old camp. We have to deal with drilling around where the historic mines were. A lot of the mining that was previously done was hand mining, done with jacklegs. So now as we move towards mechanised mining, our mining units are going to be larger, but we're going to be a lot safer as well. Luckily with the mining here, because it's so high grade, we can deal with that internal dilution and still have very good grade and still have very good economics.
Sure. Is mechanical instability an issue at Braylorm?
As we understand, it isn't. The host rock is actually an intrusive rock. It's a coarse grained diorite. So it's we believe, a very robust rock. Our drilling that we've done, our RQDs, all well in the 80s%. But honestly, we're not going to know that until we're underground, and we should be underground in April this year.
Terry, we're going to leave it there for now. Thanks very much for joining us. We'll look forward to having you back with drill results.
Thank you very much.
There you go. I hope you liked the show. We'll be back tomorrow with more Don't You Know. Hasta la vista, baby.